What is up, bosses? Let me tell you about our sponsor this week. It is our friends over at Indeed.com. Now, if you're ready to take your business to the next level, you need Indeed. Indeed makes it easy to hire and build a team with the right skills to make your dreams a reality. Indeed is the hiring partner where you can attract, interview, and hire all in one place. In fact, they are the only job site where you're guaranteed to find quality applications that meet your must-have requirements, or else you don't pay a thing. So instead of spending hours on multiple job sites hoping to find candidates with the right skills, you just need one powerful hiring partner that can do it all, and that is Indeed. I'm going to tell you even more about Indeed during the break in the show, but we got a special offer for you. If you head over to Indeed.com/iLab, we'll get you set up with a $75 sponsored job credit to upgrade your job post. All you got to do is head over to Indeed.com/iLab to claim your $75 credit before March 31st. One more time, that's Indeed.com/iLab. Like I said, I'll tell you more during the break in the show. Terms and conditions apply. Need to hire? You need Indeed.
Welcome to the Invest Like a Boss podcast.
I'm Sam Marks.
And I'm Johnny FD. We're self-made entrepreneurs who invest our own money and use modern technology to invest like a boss.
Join us each week for exclusive interviews with our network of modern investors, business owners, and multimillionaires to discover new ways to invest our hard-earned cash.
What's up, bosses? Welcome back to Invest Like a Boss. It is episode 218 of the Invest Like a Boss podcast. I'm here in Los Angeles, fresh off the Super Bowl. I've never seen a city so packed for an event. It was crazy. Sam is shirtless somewhere in the world. Where are you at, Sam?
I'm in a place that I forgot that the Super Bowl was even on.
Traffic. Okay. LA traffic, obviously world famous for being awful. Times it by 5. That was the past 5 days in this town.
If the Tom Brady's not playing in the Super Bowl, I don't even know who's playing.
He just retired.
I don't even know.
Oh, I'm going to miss Tom.
I don't know.
Actually.
I don't know.
We'll see.
I think after him sitting out a Super Bowl, I think he's thinking to come back.
Yeah, I think once they throw the pads back on and sprint and training hits, I'll be like, maybe I missed that.
Oh, those Americans and their football. They really love their football.
It was a good time, and I'm happy that the Rams won, a little hometown stuff. It's not my number one team, but if the team that you in the town that you live in can win, it's a fun time. They're doing all kinds of cool stuff. The Hollywood sign currently says Rams House instead of Hollywood. So we got a parade coming this week. It should be a good time.
Well, wasn't that the first year that they played in Los Angeles?
They've been back in LA like 5 years, but
5 years. Wow.
Yeah, it's 5 years
there
already
you
now.
Go.
And the first, only the second season in the new stadium though. The new stadium is incredible. It's by far the best stadium I've ever been to. It's amazing.
Americans listening to this are like, damn, Sam's been out of the country for a long time.
Come on, get with it, Sam. What's new with you, Sam?
Let's not talk football anymore because I sound like an idiot. What's new with me? I'm hangry because we were supposed to record 30 minutes ago and it took 35 minutes for your 1994 laptop to reboot. So I'm past my dinner time.
Oh, sorry, Sam. It is my fault though.
No, it's actually a problem here because there's only I'm outside of Barcelona in the mountains, and there's only on Tuesday night there's only one restaurant here that's open.
Oh man.
But I think they're only open for 2 hours. So you really got to get there.
You got to get in that
Otherwise,
window.
I risk not eating. I only have a carrot in my refrigerator. It's literally one carrot that I have. Not very.
I wonder if this restaurant's
I don't survive very well unless there's restaurants nearby.
Well, I wonder if that restaurant's going to take Bitcoin. I feel like if they're only open a couple hours a day, they're not too up on the new technology of accepting currencies.
Not in Catalonia. No. But we are sitting in a place right now. Bitcoin has pulled back almost 50%. It's made a little bit of a comeback, but still with a market cap of 803 billion. It was over $1 trillion earlier this year. Ethereum, not too distant, number 2 at 351. But in this episode, one I've been looking forward to for a long time, Saifedean Ammous, who is the author of the Bitcoin Standard. Actually, dude, this book, I'm actually intimidated, Derek. This book is deep, man. And this is a complicated subject. Like forget Bitcoin, just financial, like money. Money is complicated, man. The history of money, the utility and fiscal policy and reserve currencies, inflation, interest rates. It's just like, there's a lot to unpack there.
I'm actually really glad you said that, Sam, because if you're a little bit overwhelmed with this, I am extremely overwhelmed with this, but I'm definitely interested to learn more and just kind of taking a peek at Saifedean's book. It is intimidating. And I think I would absorb it better through audio because my mind just wanders when I read. But I think if I could listen to it, and I'd probably have to go back and listen to it 2 or 3 times, honestly. But I'm excited to check it out. I haven't cracked it open yet. But
yeah, it's deep. It's a great book, packed with history. Before we get into the episode, I wanted to take a quick look just to give listeners an idea of where Bitcoin stands in terms of market cap, or you could call it money supply. But going back to 2010, when Bitcoin was still kind of off the radar for everybody, and it was priced around like $100 or something. If you had taken a look at the money supply at that time, and you had said, okay, for Bitcoin to become a top 20 currency in terms of money supply, you would have to establish a price point of about $10,000 a coin. So anyone that did that back then and decided, okay, I think Bitcoin could become a top 20 currency. Well, obviously it's done quite well. But to give you an idea right now of the top currencies in the world, guess where Bitcoin falls? Go ahead.
So
Derek.
I think it is a top 20 now, right?
It is a top 20. Give me a number.
I'm going to say not top 10 because I feel like that would have been a giant headline. I'm going to say like 16. How about that?
Yeah. Okay. So pretty close. I think it's 13 based on my calculations, and I'm sure you could skin this a lot of different ways. So here's how they stack up. So number one is the RMB, Chinese, 38 trillion. I'll just do the top 5 and then I'll tell you the other ones. US dollar, 22 trillion, euro, 16 trillion, Japanese yen, 13 trillion, pound sterling, just under 5 trillion. And then you have South Korean, Indian, Canadian, Hong Kong, Australia, Brazil, Swiss, and then you would have Bitcoin if you consider Bitcoin a currency, and that would be just around $1 trillion mark. So that would be the 13th. And as a comparison as well, gold and silver as comparables, you have gold at 7.5 trillion and you have silver at 1.3 trillion. So by that standard, Bitcoin would be right around silver, but still significantly smaller than gold. So a pretty interesting comparable. Obviously, Bitcoin's been marching up those rankings, but in order for Bitcoin to crack the top 10 in currency, it would have to get to 1, 2, 3, 4, 5, 6. It would have to get to somewhere around 2.5 trillion, which is basically 2x from where it is now, or a little bit more than 2x.
Does that mean back in December when we were seeing Bitcoin at like 65, 70,000, flirting with 70,000, that it technically kind of was a top 10 currency for a while?
No, because I think the market cap of Bitcoin then, when it was around 65,000, was around like 1.2 or 1.3 trillion. Now it's
gotcha.
850. So it would have to go kind of double from there to crack the top 10. So you can establish a price point of somewhere around, let's say, just under 150,000.
That's still amazing when you think of like Bitcoin was just a joke 4 or 5 years ago, essentially. And look where it is now. Everyone's starting to really look at it seriously.
It's big money. All right. Well, I got to save some energy for Saifedean on this episode. We're going to talk about money, inflation, reserve currencies, Bitcoin, and whatever else I can come up with.
Yeah, I really want to hear his thoughts on inflation because that's obviously top of mind right now. I think you and I, Sam, agree that, you know, they're telling us inflation is, at least in the US, is around like 3%. There's no way. It's way more than 3%, at least on your everyday goods that you purchase or your little 2-hour window restaurants down the street.
Oh, that consumer price index. There's something up to that.
I also want to hear his thoughts on the actual supply of Bitcoin, because as we know, Bitcoin has a limited supply. I'm pretty sure it's 21 million Bitcoin only exists and there'll never be more. I think it's 21 million, right?
21 million. And actually, if you really think about how many Bitcoin will ever be in max supply, it's probably somewhere between half and 75% of that number, simply because there's Bitcoins sitting in dumpsters all over the world. and left without keys to inheritees who have no idea that their aunt, uncle, dad, grandpa ever even owned Bitcoin. And so there's so many Bitcoin that will just never, ever see the light of day or be in circulation.
And unfortunately, Sam knows a few about those Bitcoin out there as well that are missing. That's a story for another time, though, I think. So why don't we get into it? Sam is going to interview the author of the Bitcoin Standard. He also has a new book out called the Fiat Standard, if you want to check that out as well. His name is Saifedean Ammous. Here he is now on Invest Like a Boss. This week's sponsor of Invest Like a Boss happens to be our longest running sponsor on the show. It is Indeed.com. If you're looking to make a great hire this year, you need Indeed. Indeed makes it easy to hire great talent. According to ComScore, Indeed is the #1 job site in the world. In fact, they deliver 4 times more hires than all other job sites combined, according to Talent Nest. So join the more than 3 million businesses worldwide that use Indeed to hire great talent fast. And as a special offer just for using Indeed and listening to Invest Like a Boss, we can get you set up with a $75 sponsored job credit to upgrade your job post when you head over to Indeed.com/iLab now through March 31st. That's Indeed.com/ILAB. You can claim your $75 credit at Indeed.com/iLab. Terms and conditions apply. Need to hire? You need Indeed.
I'm joined here with Saifedean Ammous, author of the Bitcoin Standard and most recently the Fiat Standard. Saifedean, it's a pleasure to host you on the show, and thank you as well for helping to educate us on a very complicated but important topic of money.
Thank you for having me. It's a pleasure.
Yeah, absolutely. Looking forward to it. The money and Bitcoin, they're very broad topics. Can certainly read more about those in your books and some of the other material that and research that you've done. But I was hoping to clarify some of your views, but also around some of the volatility and news that we hear today on Bitcoin. And just to give the listeners some context, your book, The Bitcoin Standard, is a really excellent history of money. And I know you're both an economist and an engineer, so you already have a great background going into publishing and writing the books. But how much additional research did you have to do to actually write the Bitcoin Standard?
To be frank, I did a lot of research, but most of it was done before I decided to write the Bitcoin Standard. The Bitcoin Standard was the coming together of maybe 10 years of researching these topics and looking into them and getting in depth into trying to understand money from the Austrian perspective and thinking about gold and fiat money, and then Bitcoin coming along and studying Bitcoin and dismissing Bitcoin initially with all kinds of academic rationales and justifications, and then coming around to understanding it and appreciating it. And then once I decided that there was a story there that needs to be told, I just put all of that stuff together in a remarkably fast time. It was about 2.5 months in which I wrote the book, really. I'd had notes that I'd built up over the years for many of these ideas, so I just pulled them all together, and I had the ideas clear in my mind, and I just could write pretty quickly. But the Fiat Standard required a lot more methodical research and writing, so that took longer. It wasn't just 2.5 months.
So the research that you've been doing for that's built into these books sounds like it's been going on for more than a decade. Can you remember any big aha moments where you had a major surprise or a major insight that you gained that maybe shifted the way that you were thinking about cryptocurrencies or Bitcoin specifically?
I think maybe the biggest aha moment was it was before Bitcoin, but it was what made me ripe for Bitcoin, really. This was around 2008 or so, when I had just started getting into the Austrian school. So I'd heard about Hayek initially, started in 2007. I'd heard about Hayek as early as 2004 or so. But I only really started to get into his work in 2007, and then I started looking into a bunch of other Austrian economists like Mises and Rothbard. And I was reading this paper called The Austrian Theory of Money by Murray Rothbard. And this was like one of the earliest papers that I'd read in Austrian economics. So I was still not very familiar with Austrian economics or with Rothbard or Mises when I read it. Must have been 2008, most likely. And I remember coming across a part of that paper where Rothbard says, money is unique among all goods. And he quotes Mises as well, making the same point, that money is unique among all goods in the fact that its total quantity does not matter. What matters is the purchasing power. And for Rothbard, essentially, he says basically that's what distinguishes the Austrians. And I think it's a very, very true fact. I think it's indisputable. The quantity of money itself doesn't matter as a number. And any quantity of money is enough for any economy as long as the unit is divisible enough. And so there is no reason for the money supply to increase at all. And once you think about it this way, you realize that the reason the money supply increases is not because it's something that's necessary. It's not natural. It's not a force of nature that forces us to find more money. Under gold, it's because people continue to mine for more gold, so there's no way of stopping them because anybody can mine for gold. Mm-hmm. But under gold, the reason gold is money is precisely because it is the form, it is the metal whose supply grows at the slowest rate. And I get into discussing the chemical reasons for why that is the case. But gold's supply is always growing at 1.5%, which is lower than all other metals and substances on Earth. And that's what makes it ideal as money, because there's very low inflation. So the best money is the one that approximates no money supply growth. Mm-hmm. So just thinking about it this way, first of all, it's extremely revealing and it's an extremely important point. And once you understand money that way, you get a grip on reality. It's like you were floating lost before then, and now you're managing to get a good grip on reality once you understand this link. The fact that the money supply itself does not matter. And then you see that the reason that the money supply grows in the current monetary system is because it is convenient for the people who control the money supply for it to grow. It's not because it's necessary for the users. And that gave me the idea that, theoretically, if we found a way of making a money whose supply could not be increased at all, that would even be better than gold. That would be the best money theoretically possible. But of course, at that time, there was no way that I could imagine how you could do something like this. And I just thought to myself, gold is the best we have because it's the closest thing that we have to approximating that. Yeah. And then a few years later, Bitcoin comes along, and the first thing that I noticed about Bitcoin, the first thing that I heard about it is that it had a fixed supply. And so, I'm not very technically competent. I'm not a programmer, and I didn't understand much about Bitcoin or cryptography or I couldn't read the code to understand what was going on. So early on, when I first heard about it, I had this academic haughty attitude of just dismissing it as, well, they're going to try and do something like this, but, the world has been around for a while. We've had a lot of people try and invent a better gold. It's never worked out, and this one is clearly also not going to work out. Although it would be interesting because it is the first fixed supply money. And it took several years for me to, put my smart-ass academic aside and engage with an open mind and think about it critically and understand it. And I come to the realization that, that is the best form of money that we've ever invented from the Austrian perspective.
It seems like all governments in the world are now using unsound money. And is there any real interest for governments to issue sound money? Because it seems like it's only in their interest to issue unsound money at this point.
Yeah, absolutely. And I think when you understand money from the Austrian perspective, initially you think, well, this clearly needs to be fixed, and, we need to fix it politically, and you start thinking about the political processes that are necessary to make this work, whether it's going to be through democratic politics or whatever. But or public activism, and it's a very, very frustrating exercise. People who are into sound money and gold have spent a lot of decades being extremely frustrated at the way things have been going. I think there's a very good reason for it, which is that it's a failure mode. We're stuck in in an infinite loop of destruction and failure in this fiat system, because the people who benefit from it are the people who are in charge of it, and they're the ones who control it. And so whoever gets into power in government, it doesn't matter what color their political party is or what ideology they profess, they are the friend of the printer. They want the printer on their side. They want the money printer. They want to be able to make money. They want to be able to enforce their economic reality on the world. And so putting money in the hand of government is a recipe for ruining money and ruining government. It's a recipe for making the government irresponsible in the way that it spends and in the way that it conducts its fiscal policy. And it's a recipe for obviously doing that by debauching and destroying the value of the currency. So over time, this just leads to an enormous number of special interest groups that get into this and benefit from it, and then it just becomes impossible to dislodge them. And Bitcoin is amazing because it is a technical solution to this problem. It's astonishing because it allows the person who is inconvenienced by government money and government inflation to just deactivate it in their life, to just opt out, to uninstall it. Like you just uninstall malware. That's what Bitcoin does for you. You remove the malware of fiat from your life. You don't have to store your value of your wealth in fiat. And then when the value of the currency declines, when they're destroying the value of the currency, you are in the clear. You're not having your savings debauched. You have your savings in something that is fixed, which nobody can increase in supply.
So in a world where all governments are issuing unsound money, there would be, let's just take the USA for instance, there would be no reason that the US would say, hey, we're moving back to sound money, whether that's gold standard or a Bitcoin standard or otherwise, because they'd be handicapping themselves. Is that right? Like, it's more like if we were going to move back to a gold standard, it would take almost a coalition of governments to say, we're moving back to a gold standard. And if other countries didn't jump on that, their currencies would just be devalued or less utilized or less accepted because there'd be nothing backing it. Is that generally the right concept?
Yeah, I think, so going on a gold standard, going on a hard money standard is good for the country, it's good for the population of the country, but it's not very good for the government. It's not very good for the kind of people who have been attracted for the government jobs in this world in which government can print money. So it's a system that's built for the most greedy, the most duplicitous to get on top. And so you wouldn't expect that people in government are going to be very crazy about something that limits their ability to have control over the lives of people around them. But on an international level, if a country goes on a gold standard, well, what ends up happening is if they have their national currency backed by gold, simply the IMF would not let you do that. And throughout the 20th century, the US government has done a lot to ensure that no countries go on gold. So the last country that was on a gold standard was Switzerland, and there was a lot of pressure on Switzerland to go off the gold standard. It's not because the gold standard was a problem for Switzerland. It was the richest country in the world on the gold standard and had zero unemployment, zero inflation, and they had great export industries, and they were an extremely prosperous, productive economy. So it was working out very well for them, but it was working out too well for them that it was hurting the U.S. If they had stayed on the gold standard, what would have happened is that basically everybody who has money anywhere in the world would have sent their money to Switzerland, and then Switzerland would have become the central bank of the world. Because the same politicians that hate the gold standard all over the world, the same politicians that control the money printer and print their own money, their own national currency, and destroy its value to support their crazy megalomaniac ideas. These very same people, their own personal fortunes are in Switzerland. They used to send them, up until the 1990s, a Swiss bank account was the most desirable thing that you could get if you were rich. Everybody who had money in the world had a Swiss bank account or wanted to get a Swiss bank account, more or less, because it was as good as gold. Your national currency, wherever you are in the world outside of Switzerland, your national currency is being destroyed all the time in terms of its value. But if you could put your money in the Swiss franc, you could be protected, and you had banking privacy, of course, and you had a very liberal, in the sense of economically liberal society, because they had sound money, so the government was extremely limited in what it could do. You had a lot of peace and a lot of prosperity and very low taxes, so it was an ideal place. So all of the people who messed up their countries and got rich by destroying their economies in the 20th century, they had Swiss bank accounts. So it would have worked great for the Swiss, and it would have eventually, I think, in a free market, in a more free market, if the central banks of the world had to compete with each other in a free market, I think the Swiss franc would have just dominated global trade. And then the Swiss central bank would have just had branch banks all over the world, or Swiss banks would have had branches all over the world that banked everybody. And I think that would have been a better thing than having everybody in the world stuck with their horrible inflationary currencies whose supply is increasing. I calculate the average in my book. It's about 14% per year, average annual supply growth rate, weighted average for fiat currencies throughout the last 60 years.
Wow. And do you think that 14% is directly correlated with inflation? Because the whole inflation metric is also a confusing one, but I looked up what's comprised in the CPI, Consumer Price Index, the other day, and I was like, okay, this has nothing to do with what I buy in a normal day, like no gas, no housing, no groceries, no clothes, no recreation. So I always feel like that inflation number is quite understated.
Yeah, I think so too. And I discussed this in the fiat standard. I think it's very understated for several reasons. The first one is that it's mathematically it's an invalid self-referential loop where you're measuring the change in the prices of things by measuring purchasing decisions, but purchasing decisions themselves are the result of the prices. So people's purchasing decisions are limited to what they can afford to buy. So if prices rise, what they buy is still going to remain the same. They're still going to buy whatever it is that they can afford to buy in terms of monetary value, but the composition of the goods that they buy will change. So as the price of beef rises, you can afford less beef, but you still have to eat. So what do? You buy less beef and you buy more beans. And so your basket of goods still has the same price. Let's say you used to spend $100 on beef in a month. Well, now you spend $100, but you get 80% beans and 20% beef. So your consumer basket of goods on which we measure the CPI is still $100. So the price has not gone up because you've just conveniently or massively inconveniently substituted away from nutritious food with inferior food. So that's one way it is. But I think also, the other thing is that, mathematically it's just entirely about what you choose to put into the basket of goods. And so, of course, this is a political measure. It's produced by government, by a bureaucracy that has interests and that has a mission. And, if they want to keep their money rolling in. If you want to get good money, you want to give the government as the numbers that are as good as possible. And so the emphasis, of course, is on the industrial goods that are cheap to produce, whose prices don't rise a lot as a result of inflation. And so that's why they put a lot of industrial food rather than nutritious food. They'll put a lot of electronics because electronics are always getting better. And so they'll calculate the fact that, look at your laptop's gotten 20% faster. The average laptop's gotten 20% faster for the same amount of money. So that's a 20% decline in the price of laptops, in the price of processing power. Your laptop now is 20% better. So, that will be a part of your basket of goods. And then things that go up in price will be other parts of the basket of goods. So the negative 20%, which drop in price in your laptop, that's part of what gives you the 2%. So it includes all of these things that are just getting cheaper and cheaper because of technology, whereas monetary policy, of course, is making a lot of things more expensive. But where you really find the inflation is in these very desirable goods and in future-oriented goods. So you find the inflation in the goods that people really want, housing in safe neighborhoods, housing in prime real estate, like say Miami Beach real estate. That's where you really see the inflation. Like look at Miami Beach real estate over the last 20 years and tell me that CPI has been 2%. No, it's appreciating at much more than 2% per year. And the same is true for, healthcare, admission to the top universities. It's true for, if you wanted to go to a restaurant where somebody prepares your meal in front of you, where you get a lot of attention with the meal, and there's a talented chef working on it, rather than, machines cranking out industrial products. That's where the inflation shows up. You look at the cost of these things. They go up and they're rising much more than inflation. So it's a purely political exercise about what you choose to include in that. And of course, it's optimized for coming up with a result that is pleasing, that is 2 to 3%. But really, in reality, I think for the majority of people, the things that they buy, the number is probably much closer to the rate of increase of the money supply, which is in the range of, has been historically in places like the US, it's been in the range of 7% per year or so on average. Last couple of years have been an exception, exceptionally high, but generally it's around 7, 8, 10% or so.
It seems like, not being an economist, it seems from an outside view that the US almost has no concern about maintaining the dollar as the primary reserve currency globally. But it's extremely in their interest to do so, right? Like they have to be behind doors trying to maintain that status, because without that status, I think one stat I read was 40% of USD holdings are by international people or international organizations. And if that was ever not the case, if there was not that demand for USD, that would set inflation up at even higher and higher rates. Is that correct? Like, when I see the amount that we're printing, it's like, it's clear that we only get away with that because of the USD's position. But some days I'm just like, man, they know the game's up and they're just like going to print as much as they can until the game's over.
Yeah, I think politically they're definitely interested in it, and they do everything they can to ensure that other central banks continue to use the US dollar and not develop useful alternatives. They want everybody locked into their payment networks, and they want everybody using the dollar. And they've done a decent job of maintaining that. But yeah, then they abuse it through... they abuse it through printing more of that money. And I think if you look at the last 60 years, the real thing that has prevented inflation from being so very high in the US is the fact that the US exports its inflation, because they just print dollars and they dump their bags of dollars on international dollar holders. So the rest of the world holding US dollar in reserves is getting the short end of the stick because they don't get the freshly printed dollars from the US government. They get them later down the line. So if you study what is called the Cantillon effect, it's a very good way of explaining how inflation is a form of redistribution. It's a redistribution from people who receive the money early to the people who receive the money late. The later on you receive the newly freshly printed money, the more prices will have risen by the time you receive that extra money. So by the time your wages go up, by the time the waiters' wages go up, the prices of the things that they buy have already gone up. Meanwhile, if you're the banks and the financial institutions that receive the newly freshly printed money or freshly issued debt, in the case of fiat money, you're one of these that receive the freshly printed debt, well, you get the fresh money before the prices have risen effectively. So your wealth increases while the waiter's wealth declines. And this is kind of what fiat does on an international scale. It's a redistributive mechanism for basically impoverishing the world to benefit the US. But it doesn't really benefit the US. That's the thing. It benefits it benefits the people who are close to the money printing spigot in the US, but I think it's massively destructive to the US economy and to the US people in the long term, because it's it's like giving a teenager a limitless credit card and telling them, buy whatever you want and this credit card will pay itself, or somebody will pay it off for you at the end of the month. That's not going to make you disciplined. That's not going to make you appreciate the meaning of work. That's not going to make you very productive. And I think a lot of the US's problems come from the fact that a lot of people there just don't have meaningful work and meaningful rewarding work. So if you want to make money, you want to get into the fiat money printer, or get close to the fiat money printer. But if you want to be productive, in many cases you're being productive. You're doing the right thing. You're doing what your parents and your grandparents taught you to do across many generations, and yet you're coming out losing from this game, because your savings are constantly being devalued.
Well, it seems like some other countries are starting to take Bitcoin very seriously. I don't know the significance of it, or haven't studied any of the specific countries per se that are starting to adopt it. I know El Salvador is one. Do you know what the significance of that news is, or of the utility of Bitcoin in those countries?
I think El Salvador is, they've been doing it now for more than 4 months. They've been, you can pay with Bitcoin in El Salvador. And I think there were a lot of good reasons to be skeptical that they could pull this off. And I personally was skeptical, but I must admit, it's worked much better than I had expected. I know many people who have been to El Salvador and they've bought and sold stuff for Bitcoin. They've paid for their breakfast with Bitcoin. So it's working, and you do it with very cheap fees, much cheaper than credit card fees, and you do it in the same time that a credit card needs to settle, not to settle, at the same time that you settle the Bitcoin transaction, in the same time that it takes to just clear the transaction on credit cards. So it seems to be working, and I think it's the long-term effect of it. If it continues to work, if El Salvador sticks to it for 4 years or so, because that's really the time horizon for Bitcoin. Bitcoin is too volatile, so you shouldn't really be engaging with Bitcoin with the short-term mentality. You shouldn't be looking to get rich by a year or two from now, or 3. You should think about it in the long term. And 4 years, I think, is a good timeline. So if they stick to it with it for 4 years, I think they're going to witness a lot of their cash reserves increase in value. A lot of people who got into Bitcoin now and are holding a little bit of Bitcoin will witness the value of it go up. And I think it's proving the usability, and it's proving the use case, and it's proving to people all over the world that there is an alternative to the US dollar system, and it's a working alternative.
Speaking of the volatility, we're sitting here, and I think Bitcoin's basically down 50% from its highs just a couple of months back. What do you think? Like, there are any trends that indicate that, or trends or data that indicate that Bitcoin is becoming more stable? Obviously, if people are perceiving this as a store of value, and you mentioned the 4-year kind of target time horizon for starting to buy and or invest in Bitcoin, like how do we get more stability to this coin?
Again, well, you can't change Bitcoin. That's one of the important things that you need to realize. You need to submit to Bitcoin. You cannot change it, and the only way that people can maintain their sanity when dealing with Bitcoin is not to try to change it. It's amazing. If you followed Bitcoin over the years, you've seen so many people have come along who have tried to change it. And many of them had a lot of money, a lot of resources, a lot of power, and a lot of influence on Bitcoin, and they still failed to change it. So we're not going to change Bitcoin to accommodate anybody's preferences. And I think this is the thing people need to keep in mind. Bitcoin is not the toy that you want. Bitcoin is the medicine that you need. And, if you need a medicine, you're not being too picky about the color of the package or, the way that the user experience is handled by the people who are selling the medicine. Bitcoin is not a toy. It's not something that we are, it's not a new iPhone app. It's not a new, electronic device that needs to convince people of its, usefulness and its utility. It's much better to think about it as being something that's extremely necessary because of the fact that it is the only currency that cannot be inflated. It's the only currency in the world that we have whose supply will never be increased. Nobody can increase it. I can very confidently tell you there will never be more than 21 million Bitcoin. It's just never going to happen. Nobody can change that. And that, I think, is what's going to mean that in the next few decades, everything else is going to get more and more inflationary, and more of these currencies are going to be printed when the need arrives, because somebody can make more of them, and because they can, they will, because that's what money always does. And Bitcoin is the only one that's going to remain there. It's the only one where you can put your money and know that there's not going to be any dilution of your stake in that monetary asset. So, this, I think, coming at it from this perspective, understanding that this is the winning horse in the race because all the other horses have a leak in them. if you allow me to butcher a bunch of metaphors, they've all got a hamstring that can be ruined by the people who benefit from these horses not performing well in terms of holding on to their values. So there's somebody who can. There are parasites who are hanging on to all the other horses. I think that's a better metaphor. There are parasites on all the other horses who can print more money and therefore extract the energy and the value that is stored in these monies by the people who use them. However, Bitcoin doesn't have that. Bitcoin is 100% parasite free. So in the long run, you bet on the horse that doesn't have the parasites. Now, in terms of the volatility, I think the fact that the supply is fixed, the fact that there's no authority that can play with the supply in a way that can accommodate the market is a feature. It's not a bug. And the answer for that is portfolio sizing. It's you size your position within your portfolio. So I think the case for Bitcoin is to hold in it the amounts of money that you are willing and able to put aside for 4 years, money that you don't need to spend in the next 4 years, either as an individual or as a business. I know that I won't need this money for 4 years. This is my long-term investment. This is, say, my kid's college fund or my retirement fund. Things that you don't want to touch for 4 years. Put that money in Bitcoin and don't worry about the price of anything that you haven't sat on for 4 years. If you do that, then all of this volatility becomes kind of entertaining, because if you're doing this, you're not concerned about the money that you bought with today, because all right, so let's say I bought last month at 60 and now it's down to 35. I've lost 50, 45%, whatever. Well, that you don't get upset about that if you put that in with the frame of mind that I'm not going to access these until another 4 years. So it's now been a few months. There's still another 3 years and 8 months to go, and most likely you're going to be all right. So they're not going to find a way of making more Bitcoin to dump it on the market, and Bitcoin is just going to keep chugging along. Nobody can stop it, and with time there's just going to be more demand, and the marginal supply is declining. Every 4 years we drop the new production of Bitcoin by half. So 4 years from today, we know that the daily production of Bitcoin is going to be half of the daily production that we have today. So the odds of it being the odds of the price being lower than what it is today are very low. Bitcoin has never been less than double its price 4 years earlier. It's always more than doubles in over 4 years, and usually much more than double.
Yeah. And I always wonder, like on the 21 million figure of how many Bitcoins there will ever be, how many are actually lost right now? Like how many are on a computer in a dump somewhere, or somebody passed away and just like never had it to transfer to anyone. Like, I mean, there could be millions of coins eventually that just are never able to surface again.
Yeah, we never really know, because you can't tell apart a lost coin from a hodled coin, and that's a feature and not a bug. It's a good thing.
No, there's three Patreon questions that I wanted to get to as we get into closing up this episode. It's been awesome. Mm-hmm. There's two kind of fun ones, and there's one that's more along the lines of government adoption. So the first question is from Matt M. It says, looking at how game theory will play out in the years ahead, do you think that the world's most powerful governments will pivot to start buying Bitcoin and look at it as a national security priority to have BTC as a national asset like gold?
I don't have a crystal ball, so I really don't know. I tend to think no, because I think governments are the last that are going to get Bitcoin, because governments are programmed, people who constitute government, people who work in government, they're programmed to think of money as being the product of government. They're programmed to think of money as being something that governments do. And so they're the last that can really grok Bitcoin, the last that can get that aha moment with Bitcoin where they realize, oh, wait, this thing works as money regardless of what government does. It does not require government authorization. It does not require government oversight. It does not require police and courts and all of this stuff in order to make it happen. So that, I think, is massively difficult for people in governments to grasp. But then again, El Salvador went ahead and did it, so who knows? We'll see.
Second question is from David Swanner. Says, what are some of the people that have reached out to you regarding the book that took you by surprise? Maybe athletes, politicians, governments that wanted to hear about your book?
Yeah, there's been quite a whole bunch of strange occurrences. So football players was one of my favorites. Stefan de Vrij, Inter Milan defender and the Holland national team defender. So I'm thrilled to finally personally know somebody who's played at a World Cup. That's a huge one for me. Russell Okung, also from the NFL, Super Bowl winner. Miss Finland also liked the book, and she's tweeting about it.
Keep writing.
Yeah, and I mean, but the weirdest thing is like all the very rich people that like it. It's a pretty curious thing to have fans who are basically billionaires, and to have it to have people like Michael Saylor and Ricardo Salinas Pliego, the third richest man in Mexico, to have them tweeting about my book and telling their followers to read my book. It's it's pretty weird.
always pays to have to teach billionaires something they didn't know. Sometimes that comes around in good ways.
And it feels wrong because, you know, they shouldn't be learning from me. They're much richer than me.
It goes to show how complicated this stuff is to a lot of people. That second question actually leads into this one. Space asks, how did it feel to orange pill Jordan Peterson?
That was great. I really enjoyed that. It was... It's amazing. I think being a university professor for 10 years taught me something very interesting, which is that I think my way of telling apart smart people is that smart people will just ask you curious questions and engage you to learn more. And I think not so smart people want to argue. Like, not so smart people can't get through an idea without taking it personally, in a sense of, all right, you think this, I think something different, let's fight. And it's something that happens a lot with Bitcoin, because Bitcoin, to be perfectly honest, it makes a lot of people look stupid because it's difficult. It's not easy to get your head around Bitcoin. It's not easy to understand that you need to, no matter who you are, you're going to need to buckle down, shut up, and read stuff that you've not learned before. You need to be humbled. Nobody was born with an understanding of cryptography and distributed networks and all of these sophisticated technologies that make Bitcoin work, as well as the economics of Bitcoin and the monetary policy implications of it, and all of these other fields that are getting into it. And you need to really be humble in order to be able to sit down and learn these things. And, you know, for most people, particularly like academics and many people on Wall Street, a lot of these people are just old dogs that can't be taught new tricks. You know, they learned their tricks in grad school back in the day, and they've been doing these tricks every morning, every working day, and that's how they live. And now, you know, you're telling them, no, you need to put aside everything you learned from your Keynesian textbook. That's not going to be useful. That's like, you know, knowing how to fix a typewriter and thinking that you can pass judgment on a MacBook. It's different. Put aside your typewriter manual and buckle down and read about public key cryptography and figure out how that works. You know, get that through your skull, understand the difference between a public key and a private key, and then think about the implications of how you can use that capability in the way that Bitcoin is using it. That's, you know, it's a difficult thing for people to get their heads around, and it takes intelligence to be able to realize that, you know, humility is the right course, and to be able to sit and ask questions and read and learn about it, rather than be the smartass. And I'll admit, you know, for many years I was the smartass, and it's the most expensive mistake in my life, because I heard about Bitcoin pretty early, but I was being an idiot academic, dismissing it. For quite a while, learned to open my mind about it, and it's a pleasure to talk to somebody who's got the ability to learn about new ideas and ask these extremely intelligent questions. So it was an extremely enjoyable conversation. I truly enjoyed it.
Oh, I thought you were talking about me, but you're talking about Jordan Peterson.
Well, you too as well. I was just going to say.
Saifedean, this is good stuff, man. We'll leave links to everything in the show notes. But before we run off, just tell us real quick where listeners can read your books or any of the other work that they might not know about.
Yeah, so my website, saifedean.com, it's where you can find my book, and it's also an online learning platform. So I have 4 courses that you can sign up for, and you can also sign up for the Membership Plus, where you get to join our weekly seminars. We have 2 seminars every week, and my books are also available there. You can see them. There's the Bitcoin Standard, which was published in 2018 and has now been translated to about 30 languages, and there's the Fiat Standard, which was just published a few months ago, and about 15 translations are in the works as we speak. And you can buy it from my website. You can also buy them on Amazon and other booksellers wherever you may be.
I enjoyed.
Oh, and
watching
also,
Go ahead.
yeah, and I'll just add one more thing. And also, there's my podcast, the Bitcoin Standard podcast. If you're into podcasts, check out the Bitcoin Standard podcast, where we host all kinds of interesting guests to discuss Bitcoin related issues.
Good stuff. Yeah, I heard you in Madrid practicing a little bit of your Spanish that you had learned to speak to a group there. So it was cool. But no, I had a great time talking with you. This is really interesting stuff. Appreciate the work that you're doing. For any of the listeners, check out the Bitcoin Standard. I've read it twice. Definitely recommend it. And looking forward to reading the Fiat Standard myself. Links in the show notes. Thanks again, Saifedean. Appreciate it.
Thank you. Pleasure to talk to you, Sam. Have a good day.
Okay, Sam, the case has been made that I need to buy more Bitcoin.
With what money?
Hopefully the money that I am just rolling in from this podcast.
Your $13 in savings in Bank of America checking account is being inflated away as we speak.
It'll be worth twice as much in 4 years from now, though. So I have $26, Sam. And I really like his point that you don't have to print more money to create value. And I think a lot of times now it's just used as a scapegoat politically, because how easy is it for, just because I know the United States the best, I guess. For example, when a president, things are down, the economy's down, and they need to look good, and they only have a few years, or it's an election year coming up, what's the easiest thing to do to fix the economy? Print more money. It doesn't seem to be the greatest solution, but it's a temporary fix, and it just seems to be passing it and kicking the can down the road. But when you're in office and a political figure, that's a quick fix, and it's somebody else's problem later on.
Hell yeah. It's a tax. I mean, why collect tax? You just print. You can just print. And it makes sense that like the gold standard is good for a population. It's good for the people. And unsound money, or being able to print money, is good for the people that are close to the printer. But I don't really know what's what, this is just the world we live in. And I would love someone to come in and argue how the world would look if we were all still on the gold standard from 1930. Like, what would be different? Would there have been wars? How would we be as wealthy? How much purchasing power would we have? Because it's easy in the US to be like, obviously this is the right thing to do because US standard of living has just gone up and up and up and up and up. And, a lot of people are in debt or living paycheck to paycheck, but by global standards, like, we're super, super wealthy.
And and he also opposed it as, I guess I never really thought about it, is that we're bullies, Switzerland was on the gold standard, and he basically said the United States forced them out of it. Right. I don't understand what's stopping another country from saying, well, if his theory of going back to the gold standard would make any particular country essentially the wealthiest country in the world, why hasn't another country wanted to hop back on it? Other than, is it the United States just, threatening punishment?
we're probably financing their Mercedes Benz and giving them a bunch of other perks. But that's the thing. Who knows what's actually what? There's all types of conspiracies out there. Great book, The Creature of Jekyll's Island, just talking about the Federal Reserve and things like this. But it all seems normal to us. I mean, I don't know. We would have to see what the world would really look like if we weren't doing this. But for sure, the US gets away with a lot simply because we have the strongest world economy and the most utilized currency in the world.
Totally. And I mean, I think one of the things to really legitimize a currency is that you're seeing large corporations jump in and investing into this. And that's something we've definitely seen in Bitcoin the last few years. We just pulled up a list recently of the top, 13 financial institutions that have invested money into Bitcoin. And it's really interesting to see that, they're in the billions of dollars invested in Bitcoin now, just in the top 10 institutions. We could run those down quick if you wanted to. Yeah.
Are you sure that's in Bitcoin, or is it just in crypto as a whole? I think it's in crypto and blockchain.
Oh, sorry. In the crypto and blockchain. Yeah, sorry.
But I'm sure a lot of that
Bitcoin
is actually Bitcoin holdings and or support for Bitcoin transactions and things like this.
Yeah, so I can just go through the list quick. Standard Chartered is, as far as when this article was published, Standard Chartered was the biggest investor, $380 million. They're heavy into the Ripple network. BNY Mellon, they have $321 million. A lot of these guys are kind of utilizing the blockchain data, it seems. And Citibank, $279 million. The UBS, 266 million. BNP Paribas, 236 million. Morgan Stanley, 234.
These are big investments.
JP Morgan Chase, 206. Goldman Sachs, 204. MUFG, 185 million. And number 10 is ING with 170 million. So we got at least 10 institutions that have invested over $150 million each. And that was just as of whenever this was written in the last few months. You know, they're just more and more every day that have jumping in. And that also, I think, legitimizes it that these large institutions are taking that big of a risk, that, you know, this is something that is real and will continue to grow. Or they're really taking a huge risk if they didn't believe in it.
It's very easy in these crypto winners to start thinking that crypto will never come back. I think in both times, I mean, you see these 50% drops, and then if you're holding crypto when it's dropping 50%.
Sorry, Sam, I got to interrupt you. Hodling.
Who's hodling? Holding.
Hodling,
right.
Not holding.
If it's your first time buying crypto and you buy at the top and it drops 50%, it's easy to be like, this is all a scam. This stuff has no utility. And I think to a large degree, most of it doesn't have utility. But if you look at some of the companies that are investing in Bitcoin, and who knows, like the governments and feds, if they're investing in it or not. I'm sure to a degree they are, they're just not disclosing it. But then if you also look at venture capital in 2021 was 5 times as much as in 2020 going into crypto projects and blockchain. So it went up from 5 billion to 25 billion in just 1 year. So when all that money has been allocated and put to the source into building these infrastructure and these companies, you have to imagine that in the next couple of years, as these things start to develop, the outlook for crypto and the infrastructure for crypto worldwide is going to be a lot stronger.
And I think there's like 15,000 cryptocurrencies or something, but why do we treat this any different than stocks though? I mean, I guess when we've said, you know, the best strategy, no matter how much you want to get in and out of stocks and think you can be a day trader, and it is fun. And, you know, Sam and I do some of that stuff on the side too, as well. But our overall plan is to long-term hold. And if history proves us right, and it has for, I guess, 10 years now with Bitcoin, it's going to go up in the long run. So why is there still so much skepticism over it?
Well, I don't know. There was just like 3.4 billion stolen in from an exchange in the US last week, right? But the feds actually got them, I think.
They recovered it. Actually, it's a fun fact now that US government is technically the largest holder of Bitcoin right now because they're still holding on to all those coins.
Oh boy, maybe they're going to stash that away in the Fed.
Yeah, they don't technically have to give it back if they don't want to, I guess.
Well, personally, I have enough confidence right now in Bitcoin and Ethereum that, especially through this dip I've been buying on the way down, I've been allocating some new money as like when I invest in stocks, but mostly I'm just looking for dips. But when it gets down to where it is now or where it has been the last couple of weeks, I have a tremendous amount of confidence that it's going to recover higher. It's just how long until that recovery, because it's been suppressed for a while and the volatility is clearly there. Like if the S&P 500 pulled back, like 10%, 12% in this latest pullback. I think as of recording this, it's down. I just checked this morning. It's down about 9% on the year, and we're midway through February here. Yeah. And Bitcoin was down like 50% at its trough. So there's a lot of volatility. You got to have a bit of a thick stomach, I think.
Yeah. So what do you think about, I liked Saifedean's analysis when you asked him about El Salvador and how the Bitcoin adoption is working there. And, you know, he didn't have glowing reviews, but he also said he kind of expected it to be a disaster. And he goes, it's going a lot better than he thought.
Yeah, it's really encouraging. I think it'll take some time to figure out how that's all working. But if assuming it's going well, you would assume that other countries will be using that as a bit of a case study.
Yeah. And that kind of brings me to my point of, let's say El Salvador does really well and continues. He said, you know, give it about 4 years. So let's say more and more countries start adopting it. Do you ever see, I mean, we already kind of saw it in China where they essentially have banned Bitcoin mining, and I don't know their policy on actually holding Bitcoin, but I know the mining has been banned. Do you ever see a time when the US would maybe execute something of not being able to hold Bitcoin. I only bring that up because when I was doing some research on the gold standard back in the 1930s, FDR, when he was president, actually made an executive order called 6102 where it banned you hoarding gold. So and then you actually had to turn in your gold to the US government and they would pay you, whatever fair market value at the time was for that gold. Do you ever see anything like that maybe coming? This is like deep conspiracy stuff, but if Bitcoin really takes off and the US feels threatened by it, what's to stop them from saying, all right, you can't hold Bitcoin anymore. You know what? We'll buy it from you, but you can't hold it anymore.
I don't know, man. It's a deep question. And I think all cards are kind of on the table. That's why I asked Saifedean about the US protecting the dollar as the global reserve currency. Because we all know that it's like massively, massively in the benefit, but then they just seem to almost have no regard to that with some of the fiscal policy. But I guess it's just they know they can get away with it. So,
yeah, and I think it's like I said in the intro, it's someone else's problem. Let them deal with it later. For now, this will work.
So if Bitcoin let's say Bitcoin grows 5x in market cap. So if it grew 5 times from here in price, let's say it got up to 250,000, it would be worth more than the British pound, which is a top 5 currency.
Wow, to be top 5, yeah.
So at that point, what happens? I don't know. I don't know the answer to that, but it certainly would be interesting because it's something that no government controls.
Yeah, a lot of stuff to take in. The book is called The Bitcoin Standard. We'll put all the links to buy it online. Also the fiat standard. Have you started that one at all, Sam? Kind of curious.
I haven't. No, you know what book I'm reading right now? Jim Rogers' book, Adventure Capitalist. And then I'm going to do, he's got one biker investor. So I'm reading those because we have Jim Rogers coming on the show in a couple of weeks time, but then I'm going to go back and read Fiat Standard.
Awesome. I never finished Adventure Capitalist. I only got about halfway through it, so don't tell him that. But I'm gonna jump back in before he's on the show as well.
Dude,
and I'm also
how can you only go halfway through that book? It's such an amazing book. Like it's not one that you get in like 3 pages and you're like, this sucks.
We'll save it for the episode.
Fair enough.
But I am going to pick up Saifedean's book, but I'm going to get it on audio. I just need to, I think it's a good one to kind of absorb in my ears instead of my eyes.
Definitely recommend it. I've listened to it twice. It's a history of money and a wealth of knowledge and understanding fiscal policy. Any of the listeners that have read it or listened to it, chat it up in Boss Lounge. I'd love to get your guys' thoughts and hope you enjoyed this episode, a little bit more of a deep dive into the history of money.
Yeah, and give us your takes on Bitcoin. Is Bitcoin your largest holding? Is there something else out there that maybe you see differently? Definitely want to hear your thoughts. Put them in the Boss Lounge. That's our private Facebook group. You can access that by going to investlikeaboss.com or on our Patreon page. You can start for as little as $5 a month. Really good content on there. We got a couple Boss Insiders coming up that we're going to announce. Some really cool previous guests that we've had on the show. I know MLG Capital is coming in. We're going to have the CEO of Common Stock, which we all started a pretty cool group with that. He'll explain how that works. A lot of good stuff coming up. And there's a new thing, too, that I got to bring up, Sam. So us and every other podcast on the planet is probably asking Spotify to do ratings, and they finally do. So if you listen to us on Spotify, would really, really appreciate it if you give us a 5-star rating on Spotify. It's a brand new system, and they're actually helping promote podcasts that actively are getting rated. So our goal this year is to really increase the audience and share episodes and share content and share our experiences with all you guys so you can help grow your wealth as well. So we really appreciate it. If you're on Spotify, just hit 5 stars.
And congratulations to Spotify for implementing a basic feature of Web 2.0 into their platform. Finally.
They got a little PR drama on their hands. I think they've been busy with lately, so I'll give them a little bit of pass. All right. Anything else before we get out of here, Sam?
No, I've enjoyed that episode. And guys, we have a great lineup of guests coming on. It's been a great year so far, I think, in terms of who we've been able to bring on. And it's all thanks to you guys for listening, for your reviews and sharing these episodes. If you have any guests that you'd like us to bring on, just hit Derek up. We're always taking guest suggestions, and we actively go after them.
All right. With that, we'll talk to you guys next week.
Thanks for listening to the Invest Like a Boss podcast. Join our mailing list at investlikeaboss.com to get exclusive access to our insider investment portfolios and our private members forum.
If you enjoyed this episode, please subscribe on iTunes or your favorite podcast app. Tell your friends and leave us a review in the iTunes store. It helps more than you know. See you guys next week.